guys, what's up? Welcome back to the channel. Got a quick video update for you here just to show you where I'm at with my trade so far this week. It's been really boring anyway, so far really boring. If you've seen last week, we were short Aussie dollar last week. You want to go back and watch those videos, you'll see the trade. We made a good bit of money last week on that trade, close to $400, so I was very happy with that. And then tried to kind of capitalize on that risk off move from last week and see if it would hold, see if the sentiment would hold this week. And shorted the Aussie yen on a technical break of this trend line here, just looking for some continuation on that move down. So we shorted it here at the open on Sunday, just waited for a little pullback and then we shorted it. But we had to sit through this whole damn pullback here, you know. I mean, from the open all the way up, it was like close to 170 points. So we kind of lost a little bit of money on this move back up because I wasn't expecting it to be sort of such an aggressive pullback, you know, especially after a gap down open. But anyway, we got in with a nice level up here. We took, you know, decent sized position up at the top here, and we rode it all the way back down here again up until last night. And then last night I just got a pain in my ass with this trade and I closed it out because it's just been super boring, this trade. I mean, look here, you know, it's just been stuck in this range. These are 4-hour candles, guys. So, you know, this is a fair few days here of trading, just up, down, up, down, up, down, sideways action. And it's just been really boring. I probably should have a bit more patience, you know, to wait it out. But the problem is that the way the situation is at the moment, and you can tell me if there's anybody watching this video who thinks is having the same thing at the moment, let me know, because I'd be interested to hear. But it's like, you look at everything, you look on paper and you say, you know, I can't be long risk at the moment. I mean, look at all the negative risk factors, you know, COVID-19, you know, the unemployment situation, geopolitical tensions, you know, the list goes on and on and on. There's so many reasons why you would be short risk right now. But the problem is nobody gives a crap. Everybody's ignoring it. And you know, just the Fed is the market at the moment. Everybody just thinks whatever, it doesn't matter. You know, the market is just completely disconnected from reality, and you know, everybody is just all aboard the gravy train. So it's really hard to be realistic and be like, okay, I'm going to short this market, because there is, you know, maybe 5,000 reasons to be short, but the market only wants and only needs the one reason to be long, you know. So you get a move where it comes off 50, 60, 70 points or whatever, and you think, okay, here we go, you know, we're starting to make progress with this trade. And then next of all, Larry Kudlow's on CNBC talking about some bullshit about V-shaped recoveries or whatever, or they wheel out some crap about more stimulus or whatever it is, and the market goes way, and you know, back up it goes, and then you just have to sit through it again. So it's frustrating, you know, it's really frustrating. And then yesterday evening, when we were finally down here and things looked good, we had a nice little bit of profit, you know, on the P&L, running P&L. Like last night, I was up at around 280 running P&L, which was nice. And then I seen this headline come out. I didn't save it, but it was something along the lines of White House decides to stop federal funding for COVID-19 testing. And I just thought, oh, for God's sake. I mean, is this how far we have to go now just to keep this market alive? You know, that they're willing to stop providing federal testing for coronavirus cases just because the numbers are going up too much and it looks bad or something. I mean, I don't even know. But anyway, I just thought, okay, if that's the lengths they're willing to go to keep things afloat, then I've got no chance shorting this thing. So I had pretty much break even in the trade, or a little bit, you know, just a little bit better maybe. And I thought, okay, close it out, forget about it, and, you know, reassess again at another time. So look, I'll probably end up regretting it. You know, this thing will probably tank fucking, you know, 200 points today, and I'll be sitting here looking at it and wishing I hadn't done it. But you know yourself, sometimes it happens, and sometimes you just, you know, the trade doesn't feel right and you get out, and that's it. So, you know, if I made a mistake, I made a mistake, whatever, we'll just live with it. So anyway, where are we now? Well, I'm in the Euro Aussie now. So I still do have Aussie short there in this trade, I suppose, which is a benefit. If risk does come off, the Australian dollar generally sells off. So we'll see the benefits of that. But I actually want to be long the euro right now. I think the euro is has got some legs to the upside. If we look at the euro now, I mean, just this is the daily chart here, the euro. If you look at this 200 moving average here, you count the amount of times that we've crossed it since. I mean, this goes back as far as April 2018. So you're talking about over 2 years now, pretty much continuously below this 200 daily moving average. And then, you know, we poked above it a couple of times, but every time we've gone up, we've come straight back down, you know. Like, I mean, look at this one. We got up here in early February. Now, of course, this was all part of the crash, so, you know, there isn't, you know, I mean, you can't really read a whole lot into the candle structure here, let's say, but, you know, we're talking about a quick up and down move. We went up above it and back down, you know, very, very quickly. But now we kind of broke out again, and now we seem to have had a pullback a few days ago, and we're kind of holding this area here, you know. We've kind of gone up and down a little bit. So I'll be interested to see how this works out. And if we do start to go a little bit higher on the euro, I think the euro's definitely got more room to the upside than the Aussie. The Aussie's quite overvalued up here. I don't think I seen a story in the was part of the RBA minutes release from the Central Bank of Australia there last week, and they said that they felt the Australian dollar was overvalued and they wouldn't like to see the Australian dollar over 70. So when you see central banks starting to talk about things like that, then you have to pay attention, because central banks, they can do certain things to make sure that that happens, you know. So you see up, you know, Australian dollars up here close 68.5 at the moment. So, you know, there isn't, you know, maybe there's not as much room to the upside for the Australian dollar. And of course, any risk off sentiment, you know, affects the Australian dollar more than the euro. So, you know, this will probably sell off more than the euro, which means your euro Aussie will, your euro Aussie long is more likely to work out in that regard. So you can see here, just got short, long here earlier on. And I'm actually in the euro NZD as well. It's pretty much the same trade, guys. I mean, there's not really any, I mean, I could put this into the euro Aussie. It's pretty much the same trade, but just like this earlier on, this was a bit better technically speaking, just breaking back above the 200 moving average there and just looking, come back down, had a retest of it. So it just held, it just took a little bit there as well. Basically, it's the same trade though. So yeah, I like the euro Aussie long. I'm looking for a move back up to, let's see, sort of up around this area here, maybe, you know, up around 170s. If we can get up there, that would be amazing. But that's going to be, you know, sort of a longer term trade that might take a week or two to play out, and that would require probably significant risk off in the market to get up there, because we need the Aussie to sell off quite strongly. But you know, at least we'd like to see it up here at around 165, maybe 166, just around that area would be nice for an initial target. We'll see kind of how it plays out over the course of the rest of today. There isn't really a whole lot left on today, just coming up of past 4 o'clock here now on Irish time. But one of the things I wanted to point out on this with regard to why I think the euro has a little bit of a room to the upside. So ECB's Marsh comes out and talks about this PEPP. This is the euro kind of stimulus package that they came out with a couple of weeks back. I think it was about 600 billion relief package, but they're saying here that they don't want to use the full package if tensions ease, right? So if the market tensions ease, right, they're saying they might not use all of this. And there's a note down the bottom here which I found interesting. It says, contrast these statements with Fed talk, which indicates no limits and no time horizon, along with current better virus outcomes in Europe, and there's a case to buy the euro. So what they're saying there essentially is the Fed is basically saying we'll just keep printing money, you know, and we're not looking at any sort of time horizon in the future where we're going to stop doing that or we're going to start to tighten up again. Whereas the ECB is saying we don't want to do this forever, and we only want to do as much as is needed, and then we want to kind of, you know, let the market do its thing. And obviously that puts a bid under the euro, because, you know, the more you print, the more you devalue the currency. So I think, you know, we've got some decent headlines come out of the eurozone as well this week. Early on Monday, let's see here, can we go back a day? Yeah, so on Monday here you can see we had the where is it now? We had, there it is there. So we had the service and PMIs and the manufacturing PMIs from Europe. So you can see here pretty much everything was a beat, you know. Even some areas gone back into expansion. So they were, you know, forecasting 45, 46 there for the French services and composite PMIs, and they were both above 50, including the manufacturing one up at 52. Anything above 50 on this, guys, just if you don't know how these things work, if anything, any reading above 50 on a PMI indicates expansion instead of contraction. So this is a really good sign that maybe the Eurozone is kind of already starting to come out of, you know, to the recovery might be starting, you know, it might be starting a little bit better than expected. So that's a good sign for the euro as well. So anyway, basically, long story short, I like the euro. I like it technically. I like it versus the dollar, the Aussie dollar anyway. So I'm going to be long. I'm going to try and build up a position in this, guys. If I can get to kind of build up a position of, you know, decent size, maybe a third of a lot or a little bit more, and we can hold it for, you know, a bit of a move up to the north here, up to around 170 or so, then I'll be really happy with this trade. This would be, you know, this would make the week and the month. So let's see what way it works out. I'll keep you posted, guys. If I get some ads into this trade and kind of start to beef it up a little bit. It's this relatively small trade. I mean, across the three positions now, it's just 0.15 of a lot, you know. So not a huge size so far. But if I beef it up a little bit, come back, give you a quick update and let you know where I'm at with the trade and how things are going. So that's basically it for the video, guys. If you liked it, just appreciate if you'd like and subscribe down below. And if you have any questions or any comments for me, just drop a comment down below. I'll be quite happy to answer any questions I can for you. And that's pretty much it. Yeah, thanks very much for watching, guys. Much appreciated, and I'll see you tomorrow. Bye bye.